Ladies and gentlemen, good day and welcome to Aditya Birla Sun Life Asset Management Q1 FY25 earnings call hosted by InCred Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jignesh Sial from InCred Equities. Thank you and over to you, sir.
Yeah, hi and good evening, everyone. On behalf of InCred Equities, I welcome all to Aditya Birla Sun Life AMC Q1 FY25 earnings conference call. We have along with us Mr. A. Balasubramanian, Managing Director and CEO, Mr. Parag Joglekar, Chief Financial Officer, and Mr. Prakash Bogle, Head Investor Relations. We are thankful to the management for allowing us this opportunity, and I would now like to hand it over to Mr. A. Balasubramanian, Managing Director and CEO of Aditya Birla Sun Life AMC, for his opening remarks. Over to you, sir.
Yeah. Thank you, Jignesh, for the introduction. And good evening, everyone, and thank you for joining us on today's investors call. I trust you all have had the chance to review our earnings presentation, which is available on both the stock exchange and our website. Let me begin with the economic outlook and update on the mutual fund industry first, before I give an update on our quarter one performance. The global economy has performed better than expected, even as uncertainty on the geopolitical front continues. There are looming political uncertainties with some critical elections yet to play out. The risk of recessions appears to have decreased, and the global economy has shown resilience to higher interest rates as well. The macroeconomic outlook for India remains broadly positive. The Indian economy grew by about 8.2% in FY24, higher than expectations, with the RBI projecting the real GDP growth for FY25 to anywhere between 7.2 to 7.5. The key contributors to the economic growth include significant government spending on infrastructure, a thriving manufacturing sectors, and a strong domestic demand, as you know to all of us. To reflect specifically on the union budget announced earlier this week, we feel it is in line with the vision of building a self-reliant Bharat, focusing on the critical drivers such as MSME sectors, agriculture, manufacturing, and a strong impetus to job creation and skill development that can propel the country to the next level of growth. The focus has been to keep the fundamentals strong, catalyze the pockets of opportunity, and not deflect from the fiscal glide path as well. The budget did not have any specific announcement for the mutual fund industry, except marginal tinkering that has been done in the capital gain tax. The increase in capital gain taxes may not dampen, my belief is, on market sentiment, but also have a significant impact both on the market and mutual fund industry. The rationale is that substantial wealth that has been created in the country over the recent years makes the additional tax burden relatively minor for most investors. Moreover, investors typically base their decisions on potential returns and economic growth rather than solely on tax consideration. And Indian equity market has consistently outperformed global counterparts, reflecting the strong fundamentals of the Indian economy and the earning potential of the companies across sectors. We may see some earnings consolidations going ahead, but with the country's strong structural drivers and economic fundamentals remaining intact, there will be continued participation in Indian equities. Given India's fiscal health, one can expect rating upgrades for the country, which will also be an advantage for the Indian bond market. With respect to the mutual fund industry, as of 30th June 2024, the mutual fund industry quarterly average AUM reached 58.96 lakh crore as compared to 43 lakh crore last year around the same time, growing 37% on a year-on-year basis. During the quarter, the mutual fund industry witnessed equity net sales of around 1,40,000 crores through new funds offering and existing funds. In fact, the NFO collection in the equity fund was about 26,200 crores, majorly coming from sectoral and thematic funds. The industry SIP flows grew 44% year-on-year from 14,734 crores in June 2023 to 21,262 crores in June 2024. The total number of mutual fund folios stood at 19 crores with an increase of 28% year-on-year, with a unique customer base around 4.7 crores. The individual average AUM grew by 46% year-on-year from 28.67 lakh crore to 37.47 lakh crore and contributed 61% of the total AUM. These 30 cities with an average AUM of 11.13 lakh crore accounted for 18% of the total AUM. For us at Aditya Birla Mutual Fund, FY25 has been a special, meaning as it marks a milestone for our company, as we celebrate 30 years as an asset management company and a key player of the Indian mutual fund industry. Anchored by our unwavering values, rich legacy and exceptional team, we have built on the strong foundation and endeavored to be a formidable force in the industry. We have navigated market dynamics with agility and innovations, focused on our core strengths and made strategic moves to address areas of enhancement in order to build the business further. The efforts have come together to build momentum, which was quite visible for the final quarter of last fiscal, as well as it has further gained pace as we move to the current quarter. This is reflected in the strong momentum in our AUM numbers and growth in SIP numbers and a healthy retail growth. We posted the highest ever quarterly profit and have witnessed a substantial increase in investors' folios across various channels during the current quarter. We had a successful NFO collections of Aditya Birla Sun Life Quant Fund, mobilizing assets around 2,400 crores. It is now one of the largest funds in this category, and for us also it was one of the highest collections we have had in the last number of years. We also witnessed improvement in contribution from B30 cities. We have not just seen an increased growth contributions of corporates through institutional sales, but also rising trend in contribution through digital platform and distributors in general. Our business verticals in the alternative segment has also showcased a healthy growth driven by AIF, PMS product launches, and the AUM growth thereon. Passive business has also grown progressively through new product launches and scaling up the existing products. This progress is the result of building a robust sales ecosystem, enhanced management at the relationship manager level, increased satisfaction with service effectiveness, and positive sentiment towards the fund performance and improved digital experience have all contributed to a positive sentiment and overall improvement in the overall AUM numbers. Moving on to our business numbers, overall average assets under management, including alternate assets, reached 3,68,000 crores, reflecting 19% year-on-year growth. Our mutual fund quarterly average AUM reached 3,50,000 crores with an equity quarterly average AUM about 1,60,000 crores. SIP numbers during the quarter further moved up to cross 1,300 crores mark, showing a 39% year-on-year increase from 987 crores in June 2023 to 1,367 crores in June 2024. We had around 8.39 lakh new SIPs. Nearly we have seen a 3-time increase from the previous year. We have witnessed a healthy growth in our investors' folio. Have added around 9 lakh new folios during the quarter, bringing our total serviced folios to 94 lakhs. Our quarterly folio growth was about 9% compared to the industry 7% growth. The alternative segment, PMS and AIF remains our key focus area, but as part of our alternate business building exercise, we have strengthened our team and appointed a head of fixed income credit and aim to offer a variety of products including category 2 or category 3 alternative investment funds, and fundraising is underway for the ABSL India Special Opportunities Fund, which has been one of the growing fund in the PMS category, along with other several products that we have in the pipeline. By establishing our presence in GIFT City, we aim to manage and attract overseas investments into India to meet the growing needs of NRI and foreign investors. We are using GIFT City to launch a variety of innovative financial products, including a product which is ESG engagement fund for sustainability, index-linked funds, and thematic funds. These products are designed to meet the evolving preferences of global investors and tap into niche market. We have launched and currently on the fundraising plan for funds for the ABSL Global Emerging Market Fund that invest in emerging markets. We already touched the size of close to about 400 crores. We will be soon closing this fund in the next few months. ABSL Indexed Linked Fund that we are launching for onward remittance in India. At the same time, we are also launching a fund which is India Opportunity Fund for providing opportunities to NRI investors invest in India. We are also preparing launch funds in GIFT City, including ABSL India ESG Engagement Fund, This I had highlighted in the past that ESG engagement, but finally we are seeing the seed capital coming in, and this fund will take off in the next quarter in order to raise funds from rest of the investors in India. The same way, the FlexiCap Fund, Global Blue Chip Fund, a fund of fund is being created to attract NRI investors in India through the GIFT City. On the passive front, as of June 2024, our passive assets total to approximately about 20,900 crores. Our customer base has grown to about 7.5 lakh folios, have a diverse product portfolio of about 44 products. We at ABSL AMC are focused on driving growth in the passive segment. We have enhanced our passive core team by bringing in a head of passive with international experience, having worked with some of these funds in US which focus only on passive. And we're also looking at further expanding our product offering to capture the opportunity thematic segment both through the passive route as well as in the mutual fund route. Moving on to financials, we at ABSL AMC are happy to inform you that we have achieved our highest ever quarterly profit in Q1 of FY25. This has been driven by an improvement in the overall asset mix, and a strong focus on cost management. Our total revenue is about 418 crores versus 318 crores in Q1 of FY24, up 24% year on year. Our profit after tax is at 232 crores versus 185 crores in Q1 FY24, up 26% year on year. In fact, this is also driven by improvement in the overall operating profit that we have witnessed during the current quarter, which is due to the mix of assets changing. With this, I would like to conclude and open the floor for any questions that we may have. I will be joined by Parag Joglekar, who is our CFO, and Prakash Bogle, who is the IR in charge, to take any other questions that we may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 now. The first question is from the line of Lalit Deo from Equirus Securities. Please go ahead, sir.
Yeah, hi sir, good evening, and congratulations on a good set of numbers. So my first question is on the SIP flows. So sir, like we have seen a good ramp up in our SIP book and as well as in registrations. So could you highlight like the channels from where we are receiving the increased interest with the same? And also wanted to understand that this SIP flows also include the systematic transactions. So could you just give us a breakup between the SIP and STP flows also?
Yeah. Thanks, Lalit. I think with respect to the SIP's flows, largely are seeing the flows coming from one MFD channel, which is our traditional channel, then the digital channel, then come from the rest of the channels, including direct. So we have seen contribution coming from all the three. I think majority of the contribution has been coming from MFDs and digital channel. With respect to the breakup, though I don't have the breakup, but I think predominantly large proportion of the flows for us in the form of an SIP. Less number of transactions coming to the SIP. That's again we see that one of the opportunity for us to push aggressively in terms of improving the overall number further to the higher level. But large contribution coming from the SIP route.
Sure, sir. And so like how has been the trend in the apart from the SIP, how has been our trend in the lump sum flows also in the equity side?
The lump sum flows, of course, we got a reasonably good lump sum flows in our NFO that we did. Predominantly, there we would have got roughly about 20 crores in the form of SIPs, and rest of the flows came through the lump sums. The existing funds, there are few funds where we are seeing flows purely on the base of the acceptance, both in the large cap category as well as the thematic category. There the lump sum flows have been improving, but predominantly large flows have been coming through the SIPs.
Sure, sir. And so, on the OpEx side, so despite the NFO, despite launching the NFO in this quarter, our other OpEx has remained broadly stable has remained broadly flat on a QOQ basis. So, for the next 2 years, how are we looking at on the expenses side? And can you also give us the guidance on the ESOP expenses for FY25 and FY26?
So the expenses mainly we have been generally projecting that the expenses will grow in the inflation plus something. So maybe the cost of employee will be in the range of around 10-12%, and other than that, other OpEx will grow in the range of around 10-12%, which is the administrative OpEx. So that is what generally our target will be, and that we will be tracking.
And so on the
As mentioned, Lalit, as far as the OpEx concerns, while we of course continue to do branch expansion, we'll keep that as one of the drive, especially in the emerging market we are expanding further. Second, with respect to the people, whatever I've been communicating, most of the recruitment related at the senior level, we are more or less done, and we have to still further strengthen the team on few areas, especially in the direct and as well as on the alternate business. And these two areas will further build. And even in offshore, since we are seeing some kind of momentum coming back, especially towards India, as well as even we also seeing some kind of green shoot as far as the offshore business concerned. Therefore, these are three areas where we may have to fill. Some people-related expenses we'll have to take. But broadly, this is an approach that we'll take. But as Parag mentioned, we'll keep a close watch in terms of increasing the productivity. Therefore, increase the productivity will keep the OpEx under control.
Sure, sir. Thank you, sir.
Thank you so much. Participants who wish to ask questions may please press star 1 at this time. The next question is from the line of Dipanjan Ghosh from Citi. Please go ahead, sir.
Hi, good evening, sir. I hope I'm audible. Firstly, if you can give some color on the flow movement, net flow movement for your equity assets, excluding the sectoral funds. I mean, you have a large chunk of sectoral funds, and obviously the industry has seen strong momentum in that. But if I were to see the flow movement, net flow movement, excluding the sectoral funds, how that would be, and from a quarter perspective, how has the trend been in terms of market share on that particular chunk of the business X of sectoral funds. Second, if you mentioned that your growth in other OpEx and per cost employee will be around that 10-12% ballpark number. So is this for FY25, or you expect this to kind of remain a steady state guidance going ahead also? And lastly, 3 bookkeeping questions. If you can give your ESOP expense for the quarter, employee for the quarter. So that was the last question.
Yeah. With respect to your first question, in terms of flows, largely, of course, net sales split between the thematic funds, which I just mentioned about. That's something, right, POC equity fund, pure value fund, as well as on the quant fund that you have raised. As far as the diversity equity fund concerns, predominantly the flows are more into the main categories such as large cap and flexi cap kind of funds. But again, the large component of the flows, I would say, is coming to the thematic funds as it stands today. But overall, though, of course, next year's number generally we don't disclose it. But otherwise, broadly, the trend has been improving. But however, the market share, it's a function of significant money that has come into the industry, especially in the current quarter, which is mentioned about 1,42,000 crores, and also the differential product performing differently, say, depending upon where you have a presence, large presence, and given the fact that a certain segment of the market has been giving a significant outperformance, in that segment, we as a fund house do not have a dominant presence. To the extent that we have seen the market shares improvement is not coming as much as we would have desired to be. But however, various steps that is being taken, such as the successful closure of one NFO, successful push in terms of SIPs with a clear target to take higher numbers, and there is one area where I am seeing an improvement in terms of addition is the new customer additions and industry. Now our share has been improving, and the same way on the SIP new addition as well. And compared to the industry, I am seeing an uptick as well as increase in the gross volume as a percentage, which is a reflection of productivity. All these things, my belief is, would eventually lead to improvement in the market share. Not necessarily will have a significant it can move unless we see very large flows coming in few of the NFOs. That of course we do gun for it. But given the operating model that we have, I think these are some of the steps that we are taking in should help in terms of moving up in the overall attrition, overall contribution to the growth. With respect to the OPEX, I'll just ask Parag to give a sense, and ESOP.
So, depending the ESOP cost is in the range of around 3 odd crore, and which is already part of the employee benefit cost. And what was the other question? The OPEX, the guidance is more or less 10 to 12%. That is what we are looking at over the period. As Bala also mentioned, there may be some recruitment and there may be some activity on branch expansion will happen. But we will try to keep a close watch on the overall expenses to ensure that it is under control.
And the number of employees as of June is 1,520.
Okay. So now, perhaps just a follow-up question is, this guidance of cost, is it for FY25 or, in terms of, let's say, when the markets kind of stabilize a bit in FY26 or 27, assuming it stabilizes, what sort of flexibility do you have in terms of, because obviously, you'll be adding employees. I mean, if I understand correctly, last quarter you added around 70 employees. So, suddenly if markets were to stabilize, what sort of ability will you have to control your overheads? Just wanted to get some sense on that. And just one more question, if I can chip in, if you can give some understanding of your yields on equities for fresh versus back book and how the payouts are shaping up.
So, especially on expenses, there are some of the expenses are variable, obviously, but majority expenses will be fixed, like employee salary, rentals, and all that stuff. But there are expenses which are variable in nature, and depending on the growth of the overall AUM and overall business, that can be tweaked to certain extent. But the majority will be on the fixed side of the expenses. On yield, equity is in the range of around 68 basis.
On the new thing.
And new, generally, depending on scheme to scheme, but we generally share around 65 to 65% of our DTR with the distributor. So yield on the new will be lower than the overall yield on the stock.
Got it. Got it, sir. Thank you and all the best.
Yeah, thank you.
Thank you very much. Participants who wish to ask question may please press star and 1 at this time. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Devesh Agarwal, IIFL Securities. Please go ahead, sir.
Good afternoon, sir. Thank you for the opportunity. My first question is, sir, the tax changes that have been made in the budget, how do you think this would impact the inflows into the mutual funds of different categories? And do you see that post March 25, the AUM that is there on the debt schemes, can that see a churn to other schemes?
Yeah, I think the way we see tax changes, as far as the equity is concerned, no negative impact. The increase in the capital gain tax should not have much impact as far as the flows concerned, because largely the flows have been coming, keeping in mind the longer term investment needs of people. Therefore, plus again being pushed to the SIPs, for all will coming to the goal based thing. Therefore, I don't see as far as the equity is concerned, unless we see the equity market turn volatile, therefore it has slowed down, but nothing related to the budget, I would say. As far as the fixed income concerns, is status quo. Nothing major as though we have been expecting some steps will be taken to promote fixed income schemes in order to develop bond market on the one side, as well as create alternate product for significant equity flow that has come as a question. But having not seen, but it does not have any negative impact per se. But at the same time, there are certain asset classes which is now coming into the long-term capital gain tax, such as REIT and InvIT, gold. It now attracts the equity taxation. I think these are some of the products potentially could emerge. May not be necessarily immediately, but can potentially emerge, including hybrid product could potentially emerge to get the retail investors as part of our onboarding exercise. That's something internally we see could be an opportunity. As far as the fixed income concerns, as the expectation of interest rates start setting in, which I think we will probably see that as coming in. Therefore, and equity market volatility if it sets in, then we'll see fixed income flows also over the begin. But at the same time, what we are doing is within the fixed income space, well, of course, in the mutual fund space, we continue to keep our dominant position. We're also building our product offering on the alternate side with the fixed income oriented schemes with the higher yield return expectations than your traditional investment expectations in the alternate space by way of credit opportunities fund as well as real estate yield fund. These are the two that we are doing it mainly to the category to the HNIs and family office needs.
Right, sir. And on the same thought, sir, the recent consultation paper that SEBI has floated in terms of a new category of investment, which is 10 lakh and above. What are our thoughts around that?
It's something new. There's a segment of people who otherwise play in the market directly using the options market or F&O market. Can potentially the new product can be created by mutual fund. This will take some time, but definitely it's something innovation is coming in, which SEBI has been thinking about such kind of product with any merit for to be part of the mutual fund. Assuming scenario, if this comes and of course we'll have to build capability in terms of using the derivatives market to have this kind of product and also help in reaching out the retail investors. There is something, there is a space, but need to get educated the way we have done for other product for one to get higher participations. But as it comes, the fund house, the way we have been building capability in various other product segment, we'll do a similar one as well. But right now, too early to take a call in terms of what is the real impact that one can visualize on this. Definitely, this kind of product will become one of the customer acquisition tool, so that eventually they become part and parcel of the main mutual fund schemes.
Right, sir. Even I was thinking on the similar lines. So for this scheme, if at all this comes to mutual fund, would we need to have a completely different distribution channel which can kind of host such high, per client area?
Not necessarily, I think ultimately one of the area MF industry has beautifully adapted and articulated is asset allocation model. And it's like the way we are now saying thematic funds also now drawing the attention of investors as part of the asset allocation. I think it will fall in the same approach, so to speak.
Right, sir. Right. And sir, can you also share the yields on your debt and liquid funds?
Sure.
Debt is in the range of around 25-26, and liquid is in the range of around 12-13 basis.
Perfect, sir. Thank you so much.
Thank you. Participants who wish to ask question may please press star one at this time. The next question is from the line of Kunal from Carnelian Asset Management. Please go ahead, sir.
Hi, thank you for the opportunity. I had questions on our scheme returns, right? So basically, we're seeing improvement in one-year returns across our main equity schemes, right? If you could help elaborate, if you wish to, a little bit about more on the changes if you have done the investment team side, how do we look at, and in our interactions with distributors now since 1 year, scheme performance is improved. How do we see the traction also building upon that would be really helpful.
Sure. Thanks, Kunal. Just the way we have, I think if you have to look at the investment side, one is the new addition that we have made to the team, and second, the existing team members who have been extremely passionate about managing funds and therefore create success. So as we speak today, about 65% of the funds have been in the Q1, Q2 performance spread across various categories. And second is the way I look at the vis-a-vis the competition, how we are also in the peer group, how we are also performing in relation to the basis. As you rightly pointed out, the performance improvement was not just coming in one year, now it's even coming in the longer term. That is something has been being one of the mandate. The investment team is working on it. Second is the quant fund NFOs. Also, when we did a complete roadshow across the country, did have a positive impact. One in communicating what we have done and what is being done in the investment team, both from a team processes and what are the steps that is being taken by the investment team to deliver consistent investment performance. That is being well appreciated. And second is in terms of communication on the same thing is also being done effectively by identifying 4 or 5 products which can definitely get scaled up for us given the fact they have a longer term track record in terms of performance, existence, long term track record. People have made reasonably good money in each of those schemes. How do we get that communication done effectively to increase the level of engagement? And the last, of course, is the retail focus, that stepped up retail focus that I brought in terms of increasing the productivity of every RM in every location. That's also being monitored very closely. The SAP improvement that I'm saying, new customer acquisition that I'm saying improvement, all are an outcome of the increased efforts that being put by the team on the retail side. I think the process has begun, and with respect to the investment, wherever the gaps are there in terms of individual having capability to manage certain segment of the market cap, that also we identified and will probably have somebody on board to on the mid and small cap category where we felt probably we have to further strengthen our team. That also we have taken steps to get somebody on board. So those are some of the things that is also being appreciated internally as well as by the sales team so that they can embrace the changes and have a little bit of better engagement in the marketplace. And that's something I see as a thing. And second, we also had our all India employee meet being a 30th year, just to re-energize the team, communicate very clearly in terms of what we are doing and how we are planning to do, and so that entire team members embrace the change that we are bringing in order to go to the next level of growth. But also, of course, being appreciated by the entire employee force. That's something we had to do to ensure that the strength of the AMC, which is built over a period of time, is understood by people. At the same time, the plan that we have to grow the size is also being adopted by people across the board so that we get the contribution coming from every employee from every location.
Got it. That's really helpful. Also, if I understand correctly, we have made few changes in the sales team as well and hired few people over there as well. So if you could help a little bit understanding how is that panning out, and if you want to share the new hires What's the mental focus, engagement, any changes out there also would help. And one more question to this, I'm not too sure how meaningful it would be in the overall scheme of things, but we were also talking about cross-selling within the ABG group itself, right, at the parent level. So are you seeing any traction there? How is that panning out? And if at all, it will be very meaningful in terms of agent in the overall scheme of things. Thank you.
Sure. What's the first question, Kunal, on respect to the AAF you are saying, is it?
No, in respect of the sales team, right, also there have been few hirings that have been made.
I got it.
Yeah.
I got it. Okay. Now, with respect to the sales, of course, we did some rejuggling in terms of more people movement. That's something we did with the external person coming in with experience on managing on the wealth side as well as direct customers connect. That's something is done. And of course, incremental changes more would be at the support function. We have created reasonably good strength in terms of our digital platform and the product and business development side. We have identified few areas of opportunities to further strengthen. One such opportunity we have been driving it is emerging market opportunities. When we set it up about 3 years back, we have seen a significant contribution coming from the deeper parts of the location. We had a specific focus. The team was driving it with 100% energy going only towards building that business. That's something we have reset it up as we have seen success. Second, on the direct sales, while we have about 35-member team, we of course also been thinking that an exclusive, sharper focus that we can bring by having people who would drive it with 100% vigor in order to reach the thing. And third is within the institutional business, we've been extremely successful in building our institutional business to have a higher market share. And the institutional business team also is highly capable to reaching out to the family offices as well as ultra HNIs. That's something again we have set it up as a separate target that they should take in order to further expand the relation that they have in the institutional business. So therefore, they'll be able to leverage that benefit. That's something we are doing on few of the changes that we are looking at. Definitely is working quite well in terms of having a sharper focus on execution. And last but not the least, I think NRI one segment where having created space in the gift city as well as creating a presence in Dubai and other UCIP platforms we created, we also feel that we can bring in a little more sharper execution focus on NRI customer acquisition, though it will be too early from an output expectation point of view, but definitely create an expertise in that area could also help in getting NRI customers as we start setting up a fund of fund in gift city. That's something we do work in terms of expansion of the business. With respect to the other question, second question was on the
cross-selling within the ABG group.
Cross-sell upsells, yeah. And the cross-sell upsells, one of course, since the time there are two opportunities. One is of course PIFA. The second is ABCD. We have a separate team of people, not separate team of people, but the existing team to have this special drive that needs to be given both for the PIFA. In fact, we are seeing traction coming in that. I'm seeing month on month the number showing an improvement on the base of two things. One, a clear target setting, both on customer base as well as the AEM growth coming from PIFA. Second is the leads that come from rest of the businesses in the direct customer business and looking at that conversion ratio from the individual AMC business point of view. We have seen some attraction in terms of conversion of that into AMC customers. At the same time, in the ABCD, which is the one digital platform super app that has been created by ABC, also we are seeing some of our product positioning that we have. In fact, we have seen a reasonably good traction coming on our quant fund NFO that we did, and a similar promotion is also being done some of our existing products. So as the traction is increasing on others, the ABCD app, we are seeing actually increase the participation coming in that. So I can only say that instead of giving the numbers, on a month-on-month basis, when you review each month, we are seeing an improvement, which itself a sign of that it can contribute in addition to the push that we are giving at the AMC level.
Got it, sir. Cool. I mean, we're wishing you all the best, and also congratulations for your reappointment, sir. Thank you.
Thanks, Kunal. Thank you.
Thank you so much, sir. The next question is from the line of Abhijit from Kotak Securities. Please go ahead.
Hey, hi, good evening, everyone. So my first question, actually, I wanted to clarify on the equity yield. I missed that number, actually. Was it 68 basis points or 60 basis points?
68, Abhijit.
68. Okay, got that. And then just on this point again, like generally, like how do you see the distribution commissions evolving? Given that some of the players have talked about some scope for rationalization. So in that scenario, what would be our thought process? Given that we are now in the process of getting some of the existing larger funds to capture higher share of flows, how would we deal with a situation like that?
See, the approach we are taking, Abhijit, we have two agendas in front of us. One, of course, build a scale further, and second is improve the overall customer acquisition strategy with respect to the equity. So therefore, for us, we can't go to the other extreme, one paying too much, given the fact we also have a responsibility to deliver reasonably good profit. At the same time, we also cannot go down, take a call that I'll completely rationalize it and focus on improving the profitability. I think we'll take that middle path at this point of time, and that's an approach that we have been taking as a fund house, given the fact that we need to, one, work with the distribution partners very closely to ensure both of us grow, and second, we also build our direct channel and other channel partners, including RIA channel partners, where potentially the money could come, where the cost of acquisition could be relatively low, but at the same time, keeping in mind the overall aspiration that we have. So we will probably take that middle path, and wherever, of course, we have to give specific drive, which may need some spending we'll have to do. Also, will undertake, given the fact that that funding, it could be seen as an investment, and therefore, in the longer term, it benefits. That call also we have been taking. In fact, you would have seen this quarter, we did give an advertisement on some of our funds, but we did feel that while we are doing a lot of things right with respect to the improving the overall AMC growth, we need also spend some money on the brand building that also we have undertaken as one of the exercise. Therefore, that's an approach we take, Abhijit.
Thanks a lot, sir. And a question on flows. So outside of thematic funds, would it be fair to say that on a net basis, let's say the overall trajectory is improving month on month in terms of net flows that we are getting across some of the larger 5-6 mainstream categories?
Yes, no, definitely we are seeing an improvement, Abhijit. Of course, we still have to do a lot more. I mean, satisfied with the flows, not so much. Though an improvement is coming, definitely, no doubt. But we need to one definitely is changing a trend in terms of customer acquisition, gross sales improvement, net sales improvement on few schemes. And this something is being like SAP number improvement. See, all these things I think will keep on improving, and therefore it lead to a higher net sales on a quarter-on-quarter basis. That's what we'll aim for. But definitely the trend is actually changing, which is what we keep driving the team from a larger creation of success point of view.
Got it. And lastly, sir, you mentioned a few fund categories amongst the thematic ones. So I remember value is one that you mentioned apart from quant, which is an NFO. Are there any other major thematic categories where you're getting good flows?
See, Digital India Fund has been a rock star for us, done very well. PSU Equity Fund, we are seeing good flows. We have seen good traction on that. Banking and Financial Services Fund has done extremely well. Even Gen X Fund, where we've been officially going and telling that consumption theme could be the one area. We are even seeing some flows on the manufacturing fund, though the flow is not as big as what you see in the NFO segment, but we are seeing some flows in that.
For that. And sorry, one last is any other fund launches in the pipeline?
So we already have 2 approvals. One approval we already have, which is the innovation fund approval that we already have. We have one fund approval for defense fund on the index side, which we intend to launch very soon. And we have few pipeline of product for immediate launches. At the same time, we also have some product which have taken approval from the board, which will be filed with SEBI very soon, and so that we are able to have 1 or 2 at least product additional to help us raise funds, while of course pushing the existing product on the other side. So that's the current pipeline. Yeah, of course we also have a product pipeline for our gift city, both for outward remittance as well as inward remittance. For outward remittance, we already started one fund. The one which already started is coming to a closure by September end, where we already done about 400 crores from the LRS side. That fund will give me about 40 to 50 basis point additional revenue. And once it stops, we have actually one more product which are launching it, which is a global blue chip fund. That's something which we already taken approval from IFC. That's something we are launching it for both LRS as well as for ODA investment that can happen to the overseas investment. And the one fund of fund that we are creating for Indian flows, that's something again we are pushing it in addition to what we are doing on the domestic side. And all these products are meant for both HNIs and retail. Therefore, it could have a rub-off effect on either side.
Got it, sir. Thanks a lot and all the best.
Thank you. The next question is from the line of Dipanjan Ghosh, Citi. Please go ahead, sir.
Hi. Sorry, just one more question from my side. If you can give the SIP flows for the quarter.
1367, right?
13. That is for the month.
Month.
Yeah.
Okay. For the month is 1367.
Do you have the data for the quarter by any chance?
Yeah. Just give me.
Because.
Sure.
Thank you.
It's around 3,700, Dipanjan. Hello?
Yeah, hi. Yeah, sure. Got it.
3,700.
So, sir, just on that, on that, if I do the back calculation, it seems for the month of April and May, your SIP flow market share is around 5.7%, which is obviously lower than your March exit. So normally, what we're seeing, and even again for Jan and Feb, your SIP flow market share was around 5.7. So it just, towards the last month of the period, it seems that the SIP market share is kind of jumping in the last 2 quarters. That's the trend we have seen. So, how should one really read into this?
The way we see is, one, clearly the SIPs, we look at it from 2 angles. One, the registration of SIPs from a customer base which is coming, where the average ticket size would be roughly about 3,200 rupees kind of thing, and where we are seeing continuous improvement. And second, within that, new customer acquisitions, which I mentioned about online platform, where new customer acquisitions also come through that MFD platform, new customer acquisitions. That is something we see as a one. I think these 2 components is the one which clearly is the focus in terms of building it up. I think clearly within the SIP on an incremental registration basis, compared to the competition, especially new customer acquisitions. Now the share comes to close to about 8.5-9%, that kind of numbers we are saying. I think we have to look at from a combination point of view. I think one or two quarters such improvement ultimately will make it more sustainable from an overall momentum perspective.
Right. And so just on Vijay's question, you mentioned that your trends in thematic funds have been on an improving trajectory. But, the gross sales number for the industry has also, jumped multifold in the last few months on an absolute basis. But if I just look at relative basis rather than absolute, because the industry is doing well, so I'm assuming absolute basis everything is going up for every manufacturer. But if I just look at relative to peers, would you say that your thematic funds are, kind of improving in terms of trends relatively rather than on an absolute basis?
Yeah. Trend is definitely showing an improvement. Only with respect to thematic, you must also keep in mind all the NFO that is coming to the market is thematic. And we have a fund house having created a presence for last number of years. See, 30 years old players have got plus and minus as well. So, and we have a presence in thematic. We do get a rub-off effect on thematic funds as such thematic funds comes in the market. Definitely NFO collections have been far higher in the thematic category compared to the earlier days. So to the extent you may probably see the flows in thematic, while it is good, but lower than percentage to the industry growth sales will be lower. But I think the way I look at it is trend change. I think what's most important is the trend change that we witnessed in all parameters that we are looking at building is something which is encouraging.
Got it. Got it, sir. Thank you and all the best.
Yeah.
Thank you so much. Ladies and gentlemen, this will be the last question. The next question is from the line of Aditya from Equirus Securities. Please go ahead.
Yes, sir. So just one data keeping question. Could you also give the SIP AUM as of June end?
Yeah.
It is 77,000, Lalit.
77,000 crores.
77,000 crores,
yeah.
Yes. Yes.
Thanks, Lalit. Yeah.
Thank you, sir.
Thank you very much. Ladies and gentlemen, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining, and with this we conclude our Q1 FY25 earnings call. Do feel free to reach out to IR head, Mr. Prakash Bogle, for any queries that you may have. Thank you.
Thank you, sir. On behalf of InCred Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.